Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade, and here's what you need to know. An earnings beat from TSMC fails to stop shares sliding. The chipmaker joining the global tech sell-off on fears of more US restrictions on semiconductor sales to China. Top Democrats reportedly pressure Joe Biden to step down as Donald Trump's chosen running mate, JD Vance, ups the protectionist rhetoric at the Republican National Convention. The former president makes his speech later today. And with the ECB expected to hold rates today, investors look for hints from President Christine Lagarde on the timing of the next cut. We are live in Frankfurt.
In the meantime, a quick check on these markets. You are seeing futures flat right now on the Euro Stock 50, so not much action there, but you are seeing some outperformance right here in the UK. FTSE 100 futures higher by almost 0.5%. The currency story is interesting, though, especially ahead of that ECB decision we're going to get later today. 109.36 on euro dollar, 130 on cable. The countdown to the opening trade starts right now.
Thursday the 18th, good morning. The key question this morning is, do you buy the dip in tech? It was certainly a big dip yesterday. Does that reverse today, or do you just keep buying the small caps? That's the trade that I think a lot of people are watching very carefully right now. We are going to get back to that conversation in just a moment. Before we do that, though, we need to talk about what is happening with the UK labour market. Data dropping onto the terminal right now.
Yes, absolutely. So let's go to that. We've got numbers that are as expected. So the weekly earnings, we can move on if you like, but weekly earnings ex bonus, 5.7%. That was entirely as expected. That's a step down from 6%, so not as high as it was, not as sticky as it was perhaps. The unemployment rate also as high as expected. The interesting private sector numbers are worth dwelling on. I mean, 5.6% is the number there. And that is the area that we have seen stickiness, just as we reported sticky inflation yesterday, which changed expectations.
I don't want to move on. I think there's some really interesting things happening here, particularly after we did the King's speech yesterday, in which the Labour Party outlined its programme for the minimum wage.
Yes.
And another big increase, third year in a row, 10% plus. Plenty of warnings out there this morning that could be inflationary and that could prevent the Bank of England from cutting rates significantly.
Absolutely. So Deutsche Bank suggesting that this could be inflationary, the CEBR focusing on what it does to the Bank of England. But this, yes, increase in the rates, Kriti, but also widening the pool of people who are able to claim it, going down the age bracket, if you like. But today, the focus in the UK will very much be on security, we know, and the relationship with Europe. So the events at Blenheim Palace taking place today will put a different spin on things. But that's the data we're dealing with, the UK labour market story.
Well, the data is interesting as well because I'm still waiting for the pound to kind of stop its ongoing rally. A 130 handle, you saw pop off the numbers. It kind of paired back in just the last 60 seconds or so. But the fact that we're talking about cable at 130 and even some calls out there to go up to 132, I think that's pretty significant for the new safe haven of Europe.
Yeah, I mean, given what the Brexit vote, though, did to the pound, it's interesting that we're going to be talking about relationships with Europe a lot today.
Yeah, but does the pound, if we see a positive spin on that, gain from that? Does it continue to pick up the pace?
Is it material enough? Yes.
Not yet, it feels like, but potentially further down the road. Let's talk about what happened yesterday with the chip sector. We've been waiting for a sell-off. It has been coming and coming and coming, and now it's finally arrived. It arrived because of politics. It arrived because of a variety of factors. It was significant. I look at the numbers yesterday coming out of the market. Hugely significant. 79 points wiped off the S&P yesterday. 24 of those came from Nvidia, 10 from Apple, 8 from Meta, 7 from Broadcom. Two-thirds of the sell-off on the S&P yesterday came from those stocks alone.
I think the context is important here, not just because we've been talking about this massive tech rally in general, and this has been going on for, I want to say, at least a year's time, especially driven by NVIDIA. But in the last, I want to say, couple of weeks or so, you've seen, for really no reason, even just in the pre-market trading, call options being put on likes of Micron, NVIDIA, Intel, et cetera. Even the more smaller names, chip names that aren't necessarily related to the NVIDIA or the AI boost have been getting this massive bid, and it's really options driven. So I wonder how much of this was, to your point, a crack in that.
Right, and in a moment we'll get the earnings stories out of Europe, and there are some AI themes to pick up on there. But interesting on the do you buy the dip question, Goldman Sachs saying no. And this isn't just about what we've seen in tech yesterday or what we've seen very recently. This goes back a couple of months, but they are a little less convinced that you buy any kind of dip in the stock 600.
Seasonality is a factor. There's all kinds of different factors out there that they're citing in terms of the reason why you would maybe not want to do that. And it's been such a terrific run, and they are so concentrated. Let's talk about those European earnings. There's some really interesting ones out this morning. Novartis is one of them, I think, is fascinating. Again, upgrading its numbers.
A massive profit forecast, though, but the grain of salt that comes with it is that so much of their gains came from two key drugs, one of them being Entresto that loses its patent protection. So every time we have the CEO on of this show, we keep asking him, how do you diversify further? How do you protect against that risk of generics? And for now, it's a strategy seems to be working. But again, will it work in about 12 months' time?
We'll talk to Sam Fazeli later in the programme about this very subject, won't we? Always with a lot to say on these drug makers. ABB also stood out to me because of that tech link. They're talking about data centre demand, and that is a part of the business that is offsetting weakness elsewhere. Because if you're relying on electrification of vehicles and you're relying on rejuvenation of factories, you know, maybe those themes aren't doing so well with the manufacturing slump ongoing, but it'll be in the areas around data centres that maybe that kind of business, engineering business, able to do okay.
TSMC's not, I know it's not a European number, but but its numbers are out this morning as well. And again, they look strong on the back of the AI story. What I think is fascinating here is that the market is broadening, but the earnings gains, the beats are coming through from the stocks that are the most concentrated, i.e. the tech stocks. And I just wonder how this is going to work through the earnings season and how this is going to look. Do you broaden the market, but do you have the earnings to back it up? Or do you stick in tech where the earnings are there, but the valuations are very punchy?
Well, maybe that's something we keep an eye on then as we go through, because we're just at the sort of foothills of the earnings story here in Europe, aren't we? So as we go through, maybe we keep an eye on that theme. Here's some of the things we're watching out for today. Of course, we have a ECB rate decision. That's at 1:15 UK time. 1:30 p.m. UK time, we'll get US jobless claims. So a lot to discuss when it comes to the data prints and the central banking decisions. The French National Assembly meets. We talked about this a little bit yesterday, how this is a sort of interim assembly, and they will have limited powers as a result, still in negotiations trying to put together some sort of coalition. And we'll hear some Fed voices, and then finally we will hear from President Trump, who'll be speaking at the RNC, at that Republican convention. So that'll be something to focus on. But there were a lot of threads to the US politics story this morning, Kriti, and maybe we start away from the RNC and we start with what we've heard from Biden.
The fact that you have, I mean, we've had these calls for him to step down for a while now, but quality over quantity in terms of who is actually creating the biggest moves. Nancy Pelosi reported now by CNN to have pushed back and actually said, look, he needs to step down immediately to save the election odds. But they also had comments, reportedly, again, we haven't confirmed this part, from Chuck Schumer and Hakeem Jeffries. And these are two really important
important Democrats in the House and the Senate.
Exactly, and have not, by the way, publicly come out. In fact, every single comment on the record from all three of them has we back our party's nominee. And remember, we don't get the Democratic convention until August. So that is one part of the story. I thought the most interesting kind of angle to this was in the BET interview that President Biden had, where for the very first time on the record, he said, I wouldn't mind being a transitional president if a medical condition came up that caused it. Kamala Harris is the person to hand the reins to.
So if you vote for Biden, are you voting for Harris?
That seems to be the question.
Well, when you're voting for people who are of an advanced age, genuinely, you are increasingly mindful of their running mate. But that doesn't just apply to Biden, does it? Although we should also mention on the subject of his health, which he said is a legitimate topic of conversation in that same interview, we should mention that he's tested positive for COVID. You know, lots of people do, and it goes without passing, and it's a few times in.
But if you've got a huge focus on your health...
Yes.
Especially because we still don't know the full effects of what COVID can do as well. And when you talk about whether you're voting for Kamala Harris or not, the expectation, or at least the rumor out there, is that if she does indeed take over the party's nomination, her VP will be the governor out of North Carolina. So again, someone who's a very well-known member of the party, and his name is Governor Cooper. So this is going to be someone that is a very trusted member of the party and expected to help Kamala in terms of numbers. Let's talk about JD Vance, though, because this is, I found it really interesting that in Europe, so much of his rhetoric around China and the tariff picture, the free trade agreements, are getting so much attention because VP policies don't usually apply when you're talking about the president. This is one of the criticisms of Kamala Harris, that we don't really know what she stands for because her kind of platform is Biden's platform, and therefore what she stands for isn't clear and therefore potentially irrelevant. But that doesn't seem to be the case when it comes to JD Vance. I think it'll be interesting to see when Trump speaks later today how much of his policies are in line with JD Vance.
You come back to Anna's point. You've got two elderly gentlemen competing for this election, two younger vice presidents who potentially, in either case, could end up taking over. This is an election that feels like it's where the VP voice counts in a way that maybe traditionally it doesn't.
Well, I think the last point I'll make on that is 100% agreeing on that. And I think these are conscious decisions that they're making to appeal to the younger demographic as well. Yeah. But being a career politician in the United States has been a thing for going back centuries. And the fact that that Joe Biden is choosing to be potentially a one-term president, if he does indeed choose to step down after a 40-year career in politics, is significant. And the reason President Trump was also shocking on the political landscape is because he's not a career politician at all. And he kind of broke the mold in saying that you don't have to be a career politician to do that. It kind of feels like that's the molding.
We're quite used to that becoming an insult in the UK. We've been there over the last 8 years.
Yes.
That, being a career politician wasn't necessarily seen as positively.
We don't have one in the UK. The US has had plenty of...
We haven't made that transition in the States yet.
No.
Outside of Trump.
Well, you've had an actor.
I was about to say, Eisenhower, Reagan, there are plenty of, some of the big standouts.
Reagan was a governor before he was a...
I appreciate that, but he was an actor before that.
Totally. It's a longer conversation.
Let's talk about what else we've got coming up on the show, because we need to analyse all these thoughts and kind of bring them together. We'll preview the ECB. Of course, that's an event normally would dominate, but doesn't feel like it is. Sylvia Ardania, JP Morgan Asset Management's head of fixed income, Ian Steely's going to join us as well. There's a lot to talk about in that space. Kristen Bittley out of City Wealth is on this side of the Atlantic. She's just been to Asia. She's going to join us a little bit later on as well to figure out how to pull this all together from a wealth point of view. And what does it mean for your portfolio? Let's get an update on some of the other stories that we need to keep on your radar this morning. President Xi Jinping is to unveil his long-term vision for China's economy as he wraps up a twice-a-decade plenum on reform. The Communist Party is set to publish the plans later, with policies likely to be centred around Xi's twin quests for technology-driven high-quality growth and Chinese-style modernisation. TSMC shares are lower today, despite earnings beating already lofty analyst estimates on growing AI investments around the world. Insatiable demand for NVIDIA chips has propped up TSMC's performance, while the wider smartphone market is on a path to recovery. The World Trade Organization has accused China of lacking transparency on industrial subsidies in its first review in 3 years of Beijing's policies. The report says Chinese notifications on subsidies don't provide enough information on spending in sectors including EVs, solar and chips. The US and EU have recently moved to impose new tariffs on Chinese imports amid claims of overcapacity. OK, what else do we need to talk? We probably need to talk about Ursula von der Leyen. We're going to check in with what her future looks like. Key speech coming up very, very shortly. In front of the European Parliament, there is a vote, which I think is at around noontime, that is going to determine whether or not she is the next Commission President. The expectation is that she will win that vote, but it is absolutely on a knife edge. We're going to talk about that. We'll get the view from Blenheim Palace, where Ollie Crook is standing by to brief us on that meeting as well. Plus, also, we need to talk about what's happening in the drug sector. Novartis raising guidance, as we've discussed, an upbeat earnings performance. We'll see how that stock is going to open. We'll get some analysis from Bloomberg's Sam Fazeli. Plus, up next, it's ECB decision day. Normally this would be a massive event. Kind of feels like it's not today, but we're going to go to Frankfurt for a preview and figure out whether or not actually the ECB made a mistake in cutting rates. Does it regret that decision? You want to join in the debate? Join us around the table this morning. IB Plus, BVTV Go is the function. We'll see you in a moment. This is Bloomberg.
Welcome back to the opening trade here on Bloomberg Television. Let us take you now to the ECB conversation. Not a huge deal of expectation that we get a cut today in rates, but what guidance do we get from the ECB, if any, about another cut coming? Let's talk to Lizzie Burden, our UK correspondent, also covering European economics for us, who's in Frankfurt. Lizzie, good morning to you. Why do markets then think that a September cut is more likely than a cut today? Talk us through the rationale.
Well, Anna, you know that Europeans enjoy a long summer break, and this is like to be one of the longest in the European Central Bank's history between decisions. Not one of the 55 economists Bloomberg surveyed expected a rate cut today. Why? Well, by September, there should be more data on CPI, more data on wage growth, more data on negotiated wages as well. And therefore, it's all eyes on that September meeting. But that said, Christine Lagarde is not going to want to make the same mistake as in June, where the rate cut was over-telegraphed, perhaps too telegraphed, in fact. And therefore, today, she's likely to be non-committal without trying to undermine the market expectations of one or two more rate cuts this year. So I expect, Anna, she's going to reach back to that Sintra playbook and tell us that the ECB is data dependent. What will be interesting is whether actually they reintroduce the easing bias in the guidance.
Lizzie, walk us through the divisions within the Governing Council at the moment.
It's interesting because actually they're missing the central bank chief, de Cos, yet to be replaced. But if you look at the hawkish end of the spectrum, Kriti, you've got hawks kind of warning that you've got rapid wage growth, still about 5%, services inflation about 4%, and unemployment at a record low. So they would say, what's the rush to cut interest rates? But at the dovish end, they would point to Eurozone growth already losing steam and profit margins for companies actually showing that they're taking on the labour costs instead of passing on that burden to consumers. So they would argue that we are approaching the time to cut rates. What I think is telling is if you look back at that hawkish end, the Belgian central bank chief, Pierre Wunsch, who is actually usually quite hawkish, even he is saying that the market expectations for 2 more rate cuts this year actually looks quite reasonable. And you're hearing more and more policymakers on the Governing Council agreeing with that view, even if it isn't yet universally held.
Lizzie, thanks very much indeed. Lizzie Burden joining us out of Frankfurt at the ECB. We'll get more coverage from her throughout the morning as we count you down to that press conference, that decision a little bit later on. Silvia Ardagna, Chief European Economist at Barclays, joins us now. Silvia, good morning. It's interesting that the ECB is being so cautious at the moment. Do you think that is a reflection of the fact that maybe some on the Governing Council feel that they kind of box themselves into a corner with the first rate cut and don't want to make the same mistake with the second rate cut?
Good morning. I think that's a good explanation, or I would say the same way we think of it. They have said that they don't pre-commit, and instead, in April, they really pre-commit to a June cut. So perhaps now they want to keep language more ambiguous and leave for themselves more optionality. Having said that, we still think that by reference the downside risk to growth and acknowledging that since the June forecast, actually the data on activity have been weaker than what they expected for Q2, that could be a hint that an additional cut will come in September.
OK. Does inflation justify an additional cut?
Look, on our forecast it does, because the policy-relevant horizon is not the next month, it's not the past month, it's more the inflation rate in 12, 18 months, the one that the ECB can affect with its rate cut also. And by then, we will have inflation at 2%.
So it sounds like you don't agree with those the guy was referencing at the start of the programme who might think that maybe the ECB was wrong to cut as early as it did. What do you think counters that argument?
I think, first of all, again, to be 100% sure, we have to see what happens to inflation over the next 12 or 18 months. I would say in favor of those who wanted to cut, the activity data have weakened quite a lot. And we know that usually monetary policy influences first activity and then inflation. I think in June, on our understanding, those who thought it was a mistake got a little bit too upbeat of the Q1 GDP data that was quite higher than they had forecast. And also the entire forecast profile was revised up to above trend growth, which we think in September they have to undo part of these revisions.
So we'll wait and see then, basically, as to what this does to inflation, to see whether it's a mistake or whether it's absolutely the right course of action. Sylvia, you've just been in the United States talking to clients, and I wonder what interests US clients about the European economic story at the moment. Is it what we've just been discussing about the ECB cutting rates first, or is it something else?
Yes, definitely about the ECB cutting rates is always important for investors, but also they are interested more on the medium-term growth prospect and what could happen depending on which US administration we would have in place. Obviously, the fear or the concerns around the possible tariffs and trade wars are top of mind for investors.
I'm so tempted to ask you about the tariff question, but I'm a little bit more curious about the budget deficits in France and Italy. It feels like the turmoil or the worries have kind of slowed down just a little bit. But it wasn't too long ago that even Christine Lagarde herself talked about potentially the possibility of intervening. Where do we stand on that? Even if the markets aren't freaking out as much, is the ECB still worried about France and arguably Italy's ability to rein in that spending?
I think they are worried, and it's a challenging situation, both from an economic standpoint and political. In particular, we know that it's not easy to cut budget deficit, particularly when growth slows down. So in our world, we think that the budget deficit will go down by less than the governments are forecasting next year or so. So the ECB is likely to continue to reiterate the government should stick to the European Commission, to the European fiscal rules.
Okay, well, now you've tempted me on the tariff question. We keep asking whether the Federal Reserve in the States should be paying attention to what's happening fiscally and on a Trump 2.0. Does the ECB also need to be thinking about that, arguably more than the Federal Reserve?
I don't think more, because obviously whatever will happen in the US will obviously affect also Europe potentially, but depends on the scale of the tariffs. I'm sure that they pay attention to what are potential scenarios in terms of growth and inflation, but it might be too soon to act on just assumptions.
It just the situation just feels like it's so difficult to judge at the moment.
Yeah.
You've got US politics. We don't know whether Ursula von der Leyen's going to be the next Commission president by the end of the day. We don't know what French politics is going to look like. We don't know.
But aren't we getting...
what is going to happen?
We don't. But even just this morning, we got headlines on the impact of tariffs, not from the United States, but on China, yep. For example, and the read-through into Volvo cars, which I thought was interesting because I haven't seen any company really talk about the tariff impact, and Volvo cars actually quantified it.
Does Europe have a problem with... Does this manifest itself in Europe via the China channel, i.e. China doesn't pick up, the European economy doesn't pick up?
Definitely, that's a headwind for European growth, in particular for Germany, the fact that China is weak. And also it's the fact that China is trying to reinvent its economic model. China is now becoming a competitor for some of the European sectors. But I think it's also perhaps a monitor that we need to also to focus on domestic demand. After all, the euro area as a whole is a large economy,
yep.
with 70% of it is consumption, and households' confidence is still low on historical level.
Yep. Keep an eye on what actually we spend, not what everybody else is spending.
Sylvia, thank you very much for joining us. Sylvia Aldania, Chief European Economist at Barclays. We are going to go to the UK story, but actually stick with the broader European narrative. Keir Starmer is preparing to host more than 40 European leaders at Winston Churchill's ancestral home in England. The shot looks beautiful. We look ahead to the agenda for the UK Prime Minister's big summit. I mean, what a gift of the electoral calendar he was given to be able to network at this level at NATO, and then this, right on the back of the election. So we'll certainly be on the ground there. Somebody stopped it raining, Guy.
It looks absolutely stunning. It is stunning. Blenheim Palace is stunning. There's a lovely pub next door as well, the Bear. I remember my parents used to see that one as one of their big favourites. Anyway, I wonder whether they'll visit that as well. We'll be back. Ollie Crook is on the ground in the sunshine at Blenheim. We'll be back there in just a moment. This is Bloomberg.
Only if I was told that there was some medical condition that I had. And that's not the case. So, but I understand what people say. Look, I'm only 3 years older than Trump, okay? And I think I'm in a little better physical shape than he is.
U.S. President Joe Biden speaking at BET about what it might take for him to step down. Of course, this is happening before he learned he had contracted COVID-19, forcing him to cancel campaign appearances. Meanwhile, the Republican side, Senator JD Vance promising that Donald Trump's economic agenda, quote, will not cater to Wall Street. He, of course, was speaking at the Republican National Convention as he accepted the nomination for VP.
When I was in the 4th grade, a career politician by the name of Joe Biden supported NAFTA, a bad trade deal that sent countless good jobs to Mexico. When I was a sophomore in high school, that same career politician named Joe Biden gave China a sweetheart trade deal that destroyed even more good American middle-class manufacturing jobs.
Some strong comments there from Vice President nominee of JD Vance. Bloomberg's Chad Thomas joins us. He's, of course, the executive editor for some of our government coverage in the region. Chad, a pleasure to have you on the program. Let's start with the JD Vance story here. Walk us through how much of an impact this might have on the Trump policy, simply because it feels like Trump is already trying to fight some of the more right-wing members of his party in terms of the economic agenda. Does some of this commentary coming out of JD Vance change that?
Yeah, hi, Kriti. Good morning. JD Vance is definitely someone who is a populist candidate. He's very popular among the base. He's also a young candidate when you think about the age of both Trump and Biden. He is someone who brings youth, someone who is very busy on the social media circuit. And so he, in many ways, represents the next generation of the party. This was really his coming out speech. Of course, these conventions, these speeches at the conventions are broadcast in prime time across all the networks in the U.S. So this was a chance for people there really to get to know him. He definitely isn't someone who's going to soften Trump's positions when it comes to his positions around populism, when it comes to things like tariffs on imports into the U.S. He is someone who's probably more hardline than Trump. So if anything, he will reinforce the views that Trump has on many of these policies, and in many ways potentially push him even further to the right.
That's the Republican story. Let's talk about the Democratic story and figure out exactly what's happening there. The Democrats are in a muddle. Yesterday's comments from Joe Biden, the news that he's got COVID, all of this coming together once again to refocus attention on his health. We've got the comments around Kamala Harris. Just give us the timeline now and what is happening in terms of the process that is unfolding here.
Guy, well, it really is a tale of two very different campaigns. While you have the Republicans coming together, you have the Democrats fighting with one another whether Biden should remain in the campaign. Many media outlets in the U.S. are reporting that top Democrats, the Senate Majority Leader Chuck Schumer, the House Minority Leader, and also Nancy Pelosi, the former Speaker of the House, have told Biden privately that he cannot win in November against Trump and that he should step aside for the good of the party. They're also concerned about losing a lot of seats in both the Senate and the House. Then you have Biden coming down with COVID. He was trying to show that he was in good health and that the concerns about his health were overblown. Now he is in dealing with his COVID at his home in Rehoboth, and this will continue then to be a concern for people over his health.
Yeah, it keeps his health in focus. It stops him campaigning, perhaps in the short term, as you suggest there, Chad. And back on the Republican side of things, we've had some Russian response. Russia's top diplomat, Sergei Lavrov, weighing in with his thoughts on Trump, Vance, and what they think about Ukraine. I wonder how that plays out in U.S. politics.
Yeah, well, that's interesting. Of course, JD Vance has made very clear that he doesn't support more aid to Ukraine. He says it's not in the U.S. interest to send more money there. So it's not a surprise that you had Lavrov saying that they would prefer a Republican presidency. It'll be interesting to see how it plays out in the U.S. It's probably the one issue within the Republican Party where there is still a divide among people within the party whether to continue supporting Ukraine and the stance toward Russia. The Biden campaign seized on that immediately, saying, of course, the Russian want the Republicans to win. But it will be interesting to see. There are those, of course, within the Republican Party, like JD Vance, who say that is not in the interest of the U.S. to continue supporting Ukraine and spending billions of dollars there.
Thanks very much, Chad. Bloomberg's Europe executive editor, Chad Thomas. We're thinking on this side of the Atlantic as well as some of the domestic US politics. Let's go from that story of transatlantic politics to the European gathering that is taking place in the UK today. The UK Prime Minister Keir Starmer is hosting more than 40 European leaders at his first major international summit. Also on the agenda, a reset in relations with European nations. Bloomberg's Oliver Crook joins us now from Blenheim Palace. Ollie, very good to have you with us on the programme. So you're following the European story and it brings you here to the UK. Starting with what's at stake for Starmer, we spoke to a Goldman Sachs economist yesterday who went through a few reasons why he's quite positive on the UK right now. And one of them was about improving relationships with Europe. And that is something we're focused on at today's meeting.
Absolutely, and that is certainly the focus for Keir Starmer here, who brings together all of these European leaders right here at home. And really, the timing for him really couldn't be better. I mean, imagine this. He takes power in just a couple of weeks. He goes first to NATO, and then not only does he bring up to 50 leaders from Europe, and we're talking about an expanded notion of Europe, right? This is a summit that was devised by Emmanuel Macron back in 2020 in the response to Russia. There are up to 50, almost 50 countries here, and that includes Turkey, Norway, and of course the United Kingdom. And for Keir Starmer and for the UK, for the first time under Labour sort of control in about 14 years, for him it's really an opportunity to redefine the relationship to Europe at a time when really the entire world is separating into these separate blocks. Maybe there is a little bit more appetite to do that. Keir Starmer has said that he does not think that they have right now the best deal possible with Europe, so there is certainly going to be a longer term a renegotiation and a conversation around that. But really for him, it's to not only redefine the relationship, the question that emanates from that is obviously, what does this relationship look like going forward? What will Europe permit for that relationship to look like? Because of course they still will not allow for certain cherry picking. Brexit still needs to hurt the UK in some way from their perspective. And also, has the relationship between the UK and Europe shifted in the eyes of the British population since that vote in 2015? What sort of mandate does Starmer have to really redefine that relationship? All those conversations will be happening here.
Well, Ollie, as they're having those conversations, what's the end game? What are they hoping to deliver from the summit, if anything?
So listen, every person you talk to about Blenheim Palace, they talk about how it's the birthplace of Winston Churchill, right? But it was also the place where Theresa May hosted Donald Trump back in 2018, and that is one of the main focuses here. And in terms of concrete outcomes, one of the things that we're looking very closely for is this new security pact that will be between the UK and the EU and what that looks like. It is brought into focus, obviously, because we've seen all of the sort of turmoil within American politics. We see Joe Biden's campaign potentially coming up against some difficulties, and we get a fresh shot of sort of MAGA and sort of perspective from the Trump campaign in the form of JD Vance last night, saying that basically American allies will no longer get a free ride. The question here is then where does that leave Europe in terms of NATO, but also in terms of Ukraine? Can Europe, and is Europe willing to go at it alone if the United States steps back from supporting Ukraine? That is going to be front and center of the agenda. Not to say also, of course, tariffs is another conversation, right? We're talking about Trump taking 10% tariffs across the board. So really, this is really the first opportunity all of these leaders have to discuss all of that, particularly in light of the assassination attempt just a few days ago. This is the first meeting between all these leaders to discuss that.
Ollie, one person who is notably absent from this meeting is Ursula von der Leyen. She is about to deliver a speech to MEPs in Brussels, parliamentarians there, and this is ahead of a key vote that she must win if she is to be or is to keep her job as European Commission President. A, what is she going to say to convince them? B, what are the implications if that vote does not go her way?
Right, guys. So the key number for her is 361. That is the number of votes in a blind ballot, so it's anonymous, that she needs to win in order to regain the presidency of the commission. Remember, Guy, last time she won by only 9 votes. In terms of what the speech will contain, we actually do have a good idea of that because we got her policy priorities. They dropped just a few minutes ago. I'm just going to go through them for the sort of highlights. One of the things that she's put out, and this is probably one of the more significant, is that they're actually going to appoint a new commissioner, a defense commissioner. So that is not something that Europe has ever had before. We can obviously understand why that is the case. There's also going to be a competitiveness fund that they're going to put out. That is another sort of new piece of policy for them. They're also going to triple the number of border guards across Europe. There's going to have also a focus on climate and housing. That isn't as new, but they also have said, she said explicitly, she wants a closer relationship with the United Kingdom and to take a harder line on China. So this is the sort of flavor of this new commission if she is elected. The problem is, Guy, if she is not, that is, I mean, we should say she is expected to go through this, but if she is not, I mean, think about this. This is a summit here trying to make a stronger, more unified, wider Europe. If within the EU they can't even get their commission president through, that does not bode very well for the unity there, and it sends a fairly strong signal to Moscow.
Yep. Be interesting to see what leaders do in that kind of scenario. I think they have about a month to come up with another name. Ollie, we'll look forward to the coverage throughout the day. Bloomberg's Oliver Crook joining us from Blenheim Palace. Coming up, we're going to take a look at your stocks to watch. The Swiss drug maker Novartis front and centre this morning, raising its profit forecast again. This on demand for new treatments that it is pushing forward. We'll have all of the stocks that you need to be paying attention to first thing this morning. That's next. This is Bloomberg.
Welcome back to the opening trade. 15 minutes until the start of Europe's trading day, and the European futures picture points a little higher this morning. We've had some earnings stories to digest. Let's talk about some of the big picture themes as well, though. And we're joined by our Markets Live executive editor, Mark Cudmore, to talk about the markets in 3 minutes. Mark, let's start with tech stocks and the sell-off we saw there yesterday. Anything new in this? Tech selling, is it that, or is it buying the small caps? Is it both? What are the trends that you're watching here on stocks?
It's both, Anna. I think we've seen quite an incredible kind of change of trend in the last week, or in the last few days in particular. Now, is this the start of something sustainable, or is this just a blip? I think that's the really, really big question. I am in the camp that it's potentially the start of something sustainable, although obviously not at the pace of the rotation of the last few days. But I understand why there's still got to be debate about that. I think we've got to see what happens from the Fed meeting at the end of this month. We've got to see what happens in the political side. We've got to see what happens out of earnings season. But all those things, we've still got a couple of weeks to get clarity on them, which means that these themes of this big rotation, the broadening of the stock market strength, but yet the big index heavyweight suffering, that can continue for another week or so. And I also think that the kind of somewhat related theme of dollar weakness, is another theme that can continue for the next couple of weeks. So those two big themes this week can continue for now. Do they continue beyond July? That's what we need to find out.
OK, so let's talk about which assets have got the memo and which assets haven't got the memo. It sounds like the dollar's got the memo. It sounds like the yen maybe's got the memo. What about EM assets?
They really haven't got the memo yet. And you'd think like, hey, we're doing small cap, we're doing well, we're seeing rotation. It's a chance for value stocks. It's a chance for sectors that haven't been exposed to tech that are cheap. This really seems an ideal time for a lot of those EM markets around the world. You think of things like Brazil that have been exceptionally cheap and underperforming for a while, that are still related to the global economy, which is doing fine, should benefit from an easing central banks around the world, should benefit from the growth is still doing okay, even if not brilliantly, should benefit from the transition away from tech, should benefit from a softer dollar, lower yields, and yet EM stocks are not really roaring yet. Now, why is that? It's because of that yen clean out of the carry trades. Many of those EM positions were funded via yen, so that you at least earn yields in the interim until you wait for it to work. Yen is suddenly cleaned out, caused pain there, which has put people on the back foot. But that's not a sustainable dynamic. I think that ultimately, once the yen trade finishes playing through, and it may not have happened yet, we may have a bit more to go on the yen trade, well, then people will pile into those cheap EM assets, and that can really get traction for the second half of this year.
But Mark, doesn't EM traditionally take its cue to some extent from the commodity picture as well? Can you connect the dots for us there?
It does to some extent, but remember, some of the biggest EM are China and India, and South Korea are commodity importers. So it's not quite as clear about that. It's about which sector you've kind of got. And I think EM now is such a diverse complex. The last big EM supercycle was the mid-2000s. That coincided with a commodity supercycle. It was also a credit supercycle. It was also the rise of China. So there's a number of coinciding themes. So people do equate in their head that commodities and EM are very, very similar. In reality, as I said, some of the biggest EM markets are actually commodity importers. And the EM story is very divergent now. And I think it can play off different themes. But there are many cheap assets out there in the EM world.
All right, Bloomberg Markets Live Executive Editor Mark Cudmore, we thank you so much for your analysis. You can get more from him and the team. Just type in MLIVGO on your Bloomberg terminal. And in the meantime, as we talk about the macro, let's go to one of the major companies that it's a micro story but affects a lot of the macro. TSMC shares lower today despite earnings just beating lofty estimates on those growing AI investments around the world. Tim Colpin, our Bloomberg opinion columnist, is all over it. He, of course, covers technology over in Asia. Tim, the profit numbers were pretty strong, but talk to us about the outlook here. How much of it can we take as a gauge for the rest of the world?
Well, the outlook was really good if you're looking at it from TSMC's point of view. TSMC came out and actually raised their full-year revenue outlook. They now expect growth this year in US dollar terms to be more than 25%. Previously, they expected 20 to 25%. So that's a nice upside to them. On the capex side, though, they didn't raise their capex outlook. So they're still expecting around about $30 billion of capex this year. Also very interesting is they didn't raise their expected outlook for the broader chip industry. They still expect about 10% growth for the broader chip industry. So what we're seeing out of TSMC today may not translate through the rest of the industry. That extra growth that they're getting at the top end may be them just raising prices because their technology is so superior and their clients need them so much that they do actually have an ability to raise the amount of money they charge their clients. But through the rest of the industry, we're not seeing any more strength than we saw a week ago.
Let's talk about the other side of this story, which is the politics, Tim. Chip curbs, geopolitics, will the US stand up for Taiwan? All of that seems to be coming together to produce a really negative cocktail.
Yeah, and in fact, that was brought up at the TSMC earnings call today, and executives basically bunted that away and didn't really answer it. They said, we don't have any plans to, we're certainly not changing our plans for Arizona, for Japan, even Europe. But, put in context, we've got two things happening both from the Biden side and potentially from the Trump side. On the Biden side, the administration, according to Bloomberg News, is looking at possibly tightening curbs on the sale of equipment to China, even if it's not American equipment, even if it just uses a little bit of an American technology, then the US government might curb that. On the Trump side, in an interview with Bloomberg Business Week that was published this week, Trump basically reiterated what he said before. He said, Taiwan has taken our chip industry and, if they want us to defend them, they need to pay a bit more. Well, in fact, Taiwan didn't take the US chip industry. It's a very symbiotic relationship, but it does signal what we might expect from a possible return to Trump to the presidency. So either side, Biden or Trump, there's not a lot of good news for the chip industry in Asia right now.
OK, really good to get your analysis. Thanks so much for joining us. Bloomberg Opinions. Tim Colpan with the latest on TSMC, the earnings story and the geopolitics. Let's get the stocks to watch here in Europe. Joe Easton has a briefing from our equities team. Joe.
Morning, Anna. So starting with Volvo Cars. Now, the earnings actually slightly better than expected for the Swedish company today. But the bigger issue is the European Union tariffs on Chinese EV vehicles. That's where it makes some of its vehicles, as the CEO explained earlier.
The tariffs, if they stand at the moment, are obviously going to have an impact on profitability to some extent. Now, for us, it's a short-term problem because that's the only car that we bring in from China, and we've already made good headway on localising the production of that car into Europe. That's going to go into our Belgian facility. We publicly announced that a while ago. So the short term, we'll be hit by the tariffs. Longer term, it won't be a problem, at least not for us.
That was the Volvo Cars CEO speaking to Bloomberg earlier. As we can see on the screen here, this has actually underperformed the broader European autos index recently. Potentially, some of these concerns around tariffs are priced in, but that does seem to be the headline, and they are downgrading their sales forecast for that reason. today. Then in terms of pharmaceuticals, we've got earnings from Novartis. These ones are looking pretty strong. They are actually upgrading their earnings forecast today. Sales climbing in regions like heart failure and also some of their skin treatments as well at the top here. And their core operating income seen rising almost 20% according to the statement today. They have recently refocused on more innovative medicines and span off their generics business. We can see this stock pretty much tracking the broader health rally over the past few months. But as I say, this one is a bit more positive. Then in terms of Nokia, this one yet again looking a bit weak. Net sales down 18% in the last period. They are seeing low investment in mobile networks, and that is hitting their 5G infrastructure business once again, a continuing theme from this company. They're saying in the statement today that operators continue to be cautious, so this could potentially be negative. Would also keep an eye on Ericsson. These two tend to move in tandem, and both of them struggled over the past year. Given the slowdown in that spending, keep an eye on those two at the open of trading today.
OK, Joe, thanks very much. Our equities reporter, Joe Easton there. A couple of other things to watch as we head towards the open then. Publicis could be another one that's active. We have a guidance raise from the advertising business. Bloomberg Intelligence saying it's the bold M&A pivot into the digital business transformation and AI spending that is boosting. So we've got that AI theme coming through in businesses that are wider than just the tech universe. So that's interesting in itself. Also, we'll keep an eye on anything to do with oil. We're up 0.8% on Brent, 85.76. We saw a move of more than 2% higher yesterday in session. Canadian wildfires seem to be a theme.
The Trump story very much evidenced in that story
also,
there as well. Keep an eye on the airlines as well this morning. I'm not sure there's a direct read across from United into European airlines. That United story feels like it's a very domestic one. But maybe it is a harbinger of what is going to come for European carriers, which have been warning. Anyway, the market open is next. We are going to be counting you down to the opening trade. This is Bloomberg. Thursday the 18th, 2 minutes to go until the opening trade. Let's talk about the legacy from yesterday. European equities rallied into the close. We then saw, actually, US equities continue to rally as well, which is interesting given where we kind of finished up. Yes, we were off the lows, but US stocks were under pressure because of what was happening with big tech yesterday. And that's the narrative maybe you need to take into today. In terms of other things maybe you want to pay attention to, keep an eye on the pound. It's a little softer this morning, and I wonder whether that, Kriti, is going to affect how the FTSE opens this morning.
At least that is the early speculation, simply because you are seeing a little bit of pullback given those wage numbers in hitting 130, by the way, yesterday's session, early in today's session. Now taking a breather, an 0.8% move higher. Some of that might be the oil picture. Some of that might be the heavyweights that we're seeing to the upside, even though I'm curious what that tech read-through is. Green on the screen right now. How much of that, Anna, changes at the open, given what we saw in the States yesterday?
Yeah, we have some of those commodity prices moving higher, as you've mentioned, Kriti, so oil and iron ore, and that could be positive for London. Let's have a look at some of the other individual stocks we're tracking. Joe Easton went through a few of these. Volvo Cars, then a profit jump there. Really interesting lines, though, on China. Once again, we see China in the earnings story here for Europe. Novartis in focus. More from Sam Fazeli shortly on this one, but increasing their guidance. And thirdly, we have Publicis, which is an interesting story to keep an eye on, increasing their guidance. AI bets in focus there. So once again, we see one of these corporates here in Europe demonstrating that the AI story is broader than just the tech heavyweight names that we've known a lot about for a long time over in the United States. So I wonder if that plays into the rotation trade, perhaps a little at the margin then, Guy.
Absolutely. Keep an eye on Nokia as well. That tech story absolutely front and centre. The opening trade is almost upon us. We are expecting a positive start to the day. The tech sector absolutely front and centre once again after yesterday's big sell-off. Here we go. Here is the opening trade. Let's talk about the numbers that we see on the screen in front of us. The FTSE 100 out of the gate, positive. Keep an eye on the Swiss market as well, given what we're seeing out of Novartis this morning and what the impact is going to be. Because yesterday, the story was about Roche. We'll talk about that story again with Sam Fazeli in just a moment. But here we go. Stock 600 up 0.2%. FTSE 100 outperforming as Kriti suggested. You've got the DAX up by 0.2%. The IBEX is up by 0.3% as well. Be interesting to see what the Swiss market looks like. Kriti, break it down from a sector point of view. Where is the sector story this morning, given the legacy of yesterday's session, particularly in the United States?
Well, the heavyweights are carrying the index higher. It is all about LVMH, Novo Nordisk, ASML, for example, as well. The opening trades here higher for ASML, given that we were seeing a lot of that tech read-through. So that's going to be crucial in terms of the green on the screen. To the downside, though, we are going to be seeing some individual movers, and we'll dive into the stories here. EQT, of course, the massive PE fund out of Stockholm, out of Sweden, well, Stockholm and Sweden, is one of your biggest weights to the downside, as is Siemens as well. So that's going to be one to keep an eye on, as well as Nokia. So those are your big movers to the downside. But when it comes to what is lifting this market, it is quite literally a tale of, I want to say the Magnificent Seven, but the Sensational Six, to be a Guy Johnson about it.
Yeah, maybe. Yeah, just keeping an eye on some of them are yet to open. There we have Novartis now opening down by 2.7%. Still haven't got Publicis. That's trading halted, apparently. Volvo Cars up 6.7%, so we do see some positivity there. And Volvo Trucks up by 1%. Confusingly, both reporting on the same day, but we're keeping them separate. This is the picture then across the stocks Europe 50, with Roche doing pretty well. And at the bottom, yeah, Schneider Electric, one of your sensational six then, Guy.
Under a little bit of pressure this morning. Yeah, it's interesting to see how the mix is kind of shaking out this morning. I'm fascinated to see Novartis down as much as it is this morning. Down by over... That's quite a significant move down for a very big heavyweight stock, and interesting to see Roche on the upside. Anyway, we'll get the story on that one from Sam Fazeli in just a few moments' time. So that's how the stock story is breaking out this morning. We're kind of dealing with a little bit of yesterday's legacy. We're folding in some earnings news. We're looking forward to the ECB a little bit later on as well, and talking about some of the politics in this mix as well. Let's talk a little bit more about what is happening with the ECB. I want to come back to the bond market story as well, which I think is fascinating too. Let's get to Frankfurt. Let's talk to Lizzie Burden. She's there at the ECB ahead of what is expected to be something of a non-meeting, but I am really interested to hear the tone from Christine Lagarde a little bit later on. How cautious is she going to be, Lizzie, do you think?
You're absolutely right, Guy, because that June cut was well telegraphed, over-telegraphed perhaps, to the point that the ECB was boxed into it almost. So that's not the communication style Christine Lagarde is going to want to repeat this time. It is, as you say, all eyes on September, because by then they'll have more data on inflation and wages. They'll have a clearer idea of what the Federal Reserve is doing and how the French politics shakes out. Of course, that's Christine Lagarde's homeland. I'm sure that there'll be a question about French politics in the press conference. And you've had lots of policymakers on the Governing Council as well saying that they'd rather make a decision when they have the quarterly forecasts. So this is what every single economist in our survey expected, a September cut. But when it comes to the communications, it is a difficult balancing act. I think that she's not going to want to undermine market expectations for one or two more cuts this year, but she isn't going to want to be too committal to that September cut. Therefore, I think she's going to rely on the language of data dependence yet again. But the question I think will be interesting is whether they reintroduce the easing bias in the guidance.
All right, Bloomberg's UK correspondent and European correspondent looked at economics around the world for us. Lizzie Burden, we thank you so much for walking us through that story. Let's get a little bit more insight here. Ian Steely, International CIO for Fixed Income over at JP Morgan Asset Management, joins us this morning around the table. Welcome to our new desk. I think this is the first time we've had you on the show since then. Walk us through your take on the ECB. Does this meeting move the dial in terms of what we've already seen priced in?
I'd probably agree with pretty much everything Lizzie had to say. So, no, I don't think it does. I think if you're Christine Lagarde today, you're going to want to come out of this meeting with effectively no feathers ruffled, because Lizzie's right. They preempted the cut earlier this year. In hindsight, they probably might not have done that, had they had all the data in front of them and not told the market that it was actually going to happen. So they want to keep themselves open for September. I do think they will be looking at the data and thinking, yes, September looks like a realistic time for us to cut again. But we've got a couple of months in between, and we know what happened in the beginning of the year. Over the space of a couple of months, it can change things.
We'll come back to the policy in a second. Do we need to be paying attention to the turmoil or lack thereof of what's going on in France now, or is that kind of last week's story?
I feel from the market standpoint it's last week's story. I think there's going to be continual rumblings, but we'll continue to get data. But ultimately it's going to be now inflation, it's going to be the PMIs, it's going to be what the growth outlook looks like. And I think actually the ECB is going to be very much focused on what's happening the other side of the Atlantic with the Federal Reserve and what they're doing as well. So combination of that, let's effectively get this meeting out the way, hopefully not create any real headlines, any real news, and then take a few weeks off for the summer. Let's come back in September.
Let me pivot to the UK market then, Ian. We had the labour market data out this morning. It was all in line with expectation. But that does mean that we've got wages still running at what would be historically an elevated level, and inflation is back down to target. We saw elements of that inflation story, though, are sticky. Where does that all leave us? I see that yields are down a touch this morning at the UK, certainly at the 10-year. How do you approach gilts at this point?
So actually, we're pretty constructive on gilts at the moment, and I think if you look through the data and try to figure out what the Bank of England are focusing on, I do think they're still on for easing policy in August. And I know we had the inflation that was a little bit stickier yesterday, and I hate to say it, there does seem to be a bit of a Taylor Swift effect in there. Hotels did contribute to that. But when we look at the wage data today, it's trending down, and actually we've got the national living wage numbers out the way, and the actual month-over-month numbers, I know they're volatile. That was 0.27. That's low. So I think the Bank of England are going to be set up. I know Hugh Pill maybe doesn't quite agree with me on that, but won't be the first time the Bank of England have disagreed with the chief economist. So I think at the moment, again, let's keep an eye on the data. But it feels to me that the Bank of England do want to get moving.
We're going to need a new data set, aren't we? It's going to be how economies performed ex-Swift. This is going to have to be the new way of looking at things, perhaps.
Guy, are you making that? Are you making that index? Are you on it?
I'm
right after
on
the
it.
show.
Don't worry.
Yeah, absolutely. Let's go his name all over it. So that's interesting then. So you do think that the Bank of England cuts in August, despite some of that stickiness. Does growth justify the cut, or does growth actually not matter that much, given this is going to be a response to progress made on inflation?
Yeah, and I think that's the case for a number of central banks around the world. It's more preemptive cuts. It's central banks that believe they've taken policy into a very restrictive territory. They're forward-looking. I think they still believe monetary policy works with lags. Maybe these lags are a lot longer than previous cycles and a lot longer than a lot of people thought. But I think they want to just start the moving. And I think the idea would be that if you do these preemptive cuts and you're doing sort of 25 basis points maybe on a quarterly basis, then hopefully you allow this expansion to continue, and then you don't have to effectively panic, react and start doing big cuts later on, because actually growth is starting to slow. And I think that's what we'll be focusing. What it does mean, though, is that it means rates at the moment aren't going back to zero or anything like that. They're just trying to ease, sort of taking their foot off the brake, shall we say, on monetary policy.
So keep calm and cut rates is
exactly.
is the mantra in the UK.
If they go in August, they go in November?
Yes, I think they do. I think they continue to go on a sort of a quarterly basis, as in line with when the forecasts come out. I think that would make sense.
So we get 2 cuts this year?
I think so. And the market's pricing that, so I don't think it's a surprise.
But isn't the risk that if we don't go, therefore the risk is that actually we don't go in August, we get to September, we've probably only got the chance to do one, and therefore the market probably is a little rich right now?
Possibly, but I don't like people fixating on the end of the year.
Okay.
I much prefer to look at what's happening over the next 6 to 12 months, because I don't think it makes a huge amount of difference if they're going in November or they're going at the very beginning of 25. So for me, it's what do we expect to be happening over the next, call it 12 months or so. And I think the Bank of England will be looking to do a preemptive cutting cycle that is allowing just to take the edge off monetary policy.
Do Treasuries outperform European government bonds because the Fed actually feels like it's moving in? We feel like we maybe got a little bit more clarity, weirdly, around the Fed than we do maybe around the ECB.
Yeah, that's a very interesting question, and actually I would maybe argue the other way on that. We've had a huge outperformance of Treasuries over the last few months. For all the chatter in the markets around politics and the election in the US, the Treasury market has definitely been focusing on the data and the fact that we're seeing a bit of a softening. And then if we do get some form of political noise around the fiscal side, possibly around tariffs, I think you could argue that they're not necessarily Treasury negative, but they're probably more positive for European bonds, particularly on the tariff side, because I think the main view is that will have a bigger impact on growth in the rest of the world. And Europe's obviously a huge trading nation, a huge exporting nation, globalisation very important to Europe. I think they will be more impacted than the US would be.
All fair points. The fiscal spend, though, seems to be what's keeping a lot of this resilience on both sides of the Atlantic alive and well. You could argue that in the States. You could argue that specifically, at least in the periphery of Europe as well. in the fallout of some of the kind of deficit concerns we were talking about, again, with the U.S., but also more specifically and more recently with France and arguably with the U.K. as well, we've had guest over guest come on the show and say Spain, Italy, those credits look better than France at the moment. But the bond market isn't showing evidence of that. No one seems to be trading that way or pricing that in. Why not?
But I would say the bond market has shown that, because we saw the big sell-off in Italy on the back of the France news. We went up to about 155, 160 basis points. It's come right back down. France is still a good 15, 20 basis points above the lows of the year. So I think the market has differentiated to some extent between France and then the rest of the periphery. And I would agree with those comments. It does feel to us, at least, that Spain and Italy would be better credits for us at the moment.
Those are better credits. I just wanted to flag that we've got the first, I think it's the first OAT issuance today since the election was called. How do you think the market is going to be positioned to absorb that? I mean, we've seen volatility and a bit more stability return, but at an elevated spread on French bonds. Where do we stand?
I think it's going to be a good test. I actually think it should go absolutely fine. I mean, I do think that the kind of French headline news has gone out of the way. We're much more focused on everything else that's going on at the moment.
Ian, nice to see you. Thanks for stopping by, joining us around the table. Great to see you. Ian Steely, International CIO for Fixed Income at JP Morgan Asset Management. Look for an August cut from the Bank of England. OK, let's talk about what's happening in the stock story. Let's go to the core of what is going on here in Europe. The core 6 looks something like this. Schneider's weak. ASML, a little weak. Obviously, the chip story was yesterday. We continue to kind of factor some of that into our thinking this morning. As Anna's been pointing out throughout the morning, though, the AI trade absolutely front and centre, and in some way Schneider definitely part of that. Interesting to see Novo bouncing today. In fact, the drug sector broadly is higher today, with the exception of Novartis. Let's get some more individual stock stories. Joe Easton's here with the details.
So we got some decent moves in the corporate update stocks this morning, all the ones reporting earnings. Now, the one standing out, Novartis, this stock actually ticking lower, was down around 3%. Now, some analysts are actually pointing to how some of the legacy sales, some of the legacy products weren't actually as strong as expected. And it's worth noting that stock has risen around 20% since an April low, so potentially just a bit of profit taken on that one. Volvo Cars seems to be the profit number, making up for worries around EV tariffs. And Nokia, once again, absolutely slammed on concern around a slowdown in 5G infrastructure spending today. ABB in Switzerland also having a rough start to trading, a bit of a slowdown in their automated warehouses, their robotics, that kind of business is hitting them today. We'll flip over, lots more earnings coming through and some other decent moves to bring you on the next screen. If that does come up, there it goes. And we've got Publicis at the top here, up 8%. Now, this stock has been down a lot on concern around a slowdown in ad spending from the tech industry, but a bit of recovery in there. Randstad in recruitment, down very slightly. They have warned once again, like Page Group, they said they have seen a slowdown in some of their fee earnings, but potentially priced in. Frasers Group, I didn't expect that to be as much as that, up 10%. They are saying that they're benefiting from the summer of sport, the Euros, which we don't need any reminding about given the result, but they are doing well, selling a lot of shirts there. And also, finally, down the bottom here, we got EQT. You mentioned this one earlier. That's over in private equity investing, a bit of weakness in some of their M&A business at the moment for that one. Lots going on in the earnings boards at the moment. We'll check in on the chip stocks, though. That massive drop yesterday in ASML, down more than 10%. Actually not getting a rebound. I expected to see a bit of a boost there. BE Semi bouncing a little bit, and Infineon, ST Micro coming lower again. TSMC earnings probably not doing enough for that sector. The chip sector was down the most in 2.5 years in Europe yesterday, not really getting too much of a recovery. Finally, one morning call to bring you, and it's in the UK. Schroders gets a new overweight and a massive jump for that one. This is over at Morgan Stanley. They're citing more flows into UK equity funds is the reason they're upgrading this stock. Very interesting for those following UK capital markets. Overweight MS and Schroders up 5.6%.
Thanks very much, Joe. Joe Easton from our equities team joining us there with a look at some of the movers. And there are a number of, there's a lot going on in terms of stock stories this morning and some quite sizable reactions to earnings, aren't there? I mean, I'm looking at some of the sell-off that we've seen around ABB, and there were some positives there. We got a record margin from that business, but that's not enough in this sort of tough environment. It takes more, it would seem, to delight investors. Upgrades and downgrades to guidance, they seem to be, as always, to the fore.
You were pointing this out earlier, though, Anna. energy companies, in terms of the points gains, that's where the gains are coming from this morning. So energy is on the upside, and that is maybe partly behind what we're seeing out of the FTSE 100 today. And the rest of the market feels quite defensive. So Shell, Total and BP are all up. Nestle's up, Unilever's up. The luxury stocks come roaring back. But as you say, it's the earnings numbers and a bit of tech in the mix on the downside. ABB, ASML, Schneider's down. So the AI trade's quite mixed today and quite nuanced. You've got the Publicis story, but then you've got the legacy effect maybe still coming through from ASML and what we saw in the chip sector more broadly.
Yeah, I think the regional perspective is interesting because this is a really strong rally to the upside this morning. And we were kind of set that up that way from the get-go from futures. But the fact that we are seeing the likes of course, the members of the Swiss market that you mentioned, but also the Swedish market really taking a hit. I'm just looking at, we mentioned EQT earlier as well. But Ericsson taking a pretty big hit this morning as well, down about 1.4%. And one of your biggest weights to the downside. So it's interesting that those are the two markets that are underperforming this broad rally you're seeing everywhere else.
But the question we asked first thing, do you buy the dip? Doesn't feel a convincing dip buying session thus far. Feels like maybe a broadening session.
Like an autopilot, maybe?
We're buying other things. We're bouncing back a little bit, maybe from the sell-off we saw in luxury a few days back. That was a story yesterday, and it's a story again today. But this doesn't feel massively convincing. But you are seeing some of the more defensive names coming to the fore, and you are seeing, to Anna's point, maybe some of those energy stocks coming to the fore as well.
Yes.
That feels defensive to me.
Yes, and maybe that's another leg of the rotation.
Yep, exactly.
You know, we're back to things that Europe does well at, and that takes us in that kind of direction. Obviously, often we can find the most interesting themes in earnings stories, and then, you know, all it takes is to say that the oil price is up by 0.8%. And actually, that's the thing you needed to know about the European session. Coming up on the programme, we'll delve deeper into the pharma sector. Novartis raises profit guidance again as sales climb for its blockbuster psoriasis and heart failure treatments. More on this and the health sector. That's coming up. This is Bloomberg. Welcome back to the opening trade, 20 minutes into our European trading day. And we have European equity markets moving a little higher this morning. Less so for the German market, it would seem, digesting a lot of earnings stories. The London market outperforming, up by just shy of 1%, and commodity prices in the mix as well. We are paying attention to what's happening in Strasbourg today. We're going to see a vote on Ursula von der Leyen. She is up for European Commission President once again, of course. And so we're focused on that. She is speaking at the moment, and we know some of the things that she's going to be talking about today. Recommitting to the EU's climate ambitions, trying to court the Greens on that particular front, whilst at the same time talking about strengthening defence industries. So there's those competing investment themes, I suppose you could call them, or competing demands for the European time that we are keeping in focus. Let me also mention that we're live in Oxfordshire in the UK at Blenheim Palace, where that European gathering of leaders is taking place. So this is broader than the EU, of course. It includes the UK and many more. So tens of leaders gathering at Blenheim Palace. We're seeing some of them arrive right now, and some of them, and a lot of focus will be on the UK's relationship with Europe. We see Keir Starmer there, I am told. The back of Keir Starmer disappearing into Blenheim Palace. That was well identified by whoever managed to point that out. Yes, does look like him there on the right. Guy, back to corporates.
We'll get used to his gait and his kind of. We'll get more used to kind of the profile of Keir Starmer, I suspect, over the next 5 years. I want to talk about what's happening in the pharma sector, because there's some really fascinating stories going on right now. We'll take you back to the Roche story and what happened yesterday with Novo and Lilly in just a moment. But let's kick things off and talk a little bit about what's happening with Novartis. The shares are lower this morning. This after the drug maker reported second quarter earnings that beat. It raised its guidance. This is a bit of a surprise to me. I'm trying to figure out why a stock of this scale is down by 2.24% on the back of this. There is but one person to ask and to try and get the answer to that question. He's called Sam Fazeli. He's sitting next to me from Bloomberg Intelligence. Can you help me?
I wish I could. No. I mean, look, the numbers aren't the reason, pretty clearly, because they beat very handsomely on operating profit, about 7%.
Yep.
Sales were, 1% better? Clearly, they're doing a great job of cost management.
Yep.
Most of the drugs did really well, maybe
Yep.
one or two little hiccups in terms of comparison to consensus. So why is it... And at the mid-year, it's looking like it's going to go towards a 20% operating profit rise this year, and consensus at 15. So what's there not to like? I can only imagine that maybe some people were expecting even more, or maybe they expected that the guidance would be more than where we are.
Yep.
It's also possible that one of their key drugs, called Pluvicto for prostate cancer, has been slower than expected. It's one of the growth drivers. Cosentyx will eventually slow down over time, which is their biggest drug. So it's possible that people have taken a little bit of a negative view of that.
Right. Well, also, as you mentioned there, some of the analysts I'm reading this morning, this just in on the Bloomberg terminal, citing the fact that another guidance raise was expected. That's a tough reputation to have for a business, isn't it? That you're just expecting these companies to keep raising guidance.
Right, but they gave it. They brought it. I mean, already the 15% growth that analysts were expecting was above what the previous guidance was. But what they've given now is better than that. I mean, it's just how much more could a company do? I mean, 20% operating profit growth in 1 year for a company this size is pretty respectable.
Can we talk about some of the other moves in the last 24 hours as well, outside of Novartis? This is coming from, I believe, Roche announced yesterday of an early-stage trial for those obesity drugs, getting in on the obesity gains. Novo Nordisk, Eli Lilly, of course, taking a pretty big hit off the back of it. Does that sustain? Does Roche get to that level?
I mean, look, I'm not used to a world where a large pharma company of that size, of that ilk, puts out a phase 1 trial data, and it's not even full data, and gets a share price reaction like this. So in the world of obesity, and you get the reaction in Lilly and Novo, I think there's a lot of hot money that comes in various directions. And I suspect what you've seen is some of that either going into Roche and then coming out of Novo Lilly. Honestly, this is a huge market that we all know about. There's going to be lots of opportunity for lots of players. This drug is unlikely to be on the market before 28, 29, by which time Novo and Lilly and others would have had new drugs come along. It's a good move, but the share price move does make you look a little bit, it did drop my jaw a little bit, especially given the size of Roche.
How early stage are we talking about?
Phase 1.
How much information do we actually have? How big a trial are we talking about? This is a $22 billion company that has moved nearly 7% over the last 2 days.
Phase 1. Phase 1 means there's a phase 2, then there's a phase 3, and these are large phase 3s, right? But if we stop, there's usually a phase 4 too in terms of looking back. But that's another 4 or 5 years. But I think it's all to do with the hotness of the obesity story.
Are we going to see more companies doing this?
Having data, so we have
putting out phase 1 data, expecting a pop, getting the algos to trade it, getting the markets excited.
Is this the healthcare version of AI? That's
well, exactly.
Right.
Obesity is definitely the healthcare version of AI, and it's a real market, just like AI is a real market, right? You can't talk to a company and they tell you, no, we're not doing anything in AI. It just doesn't exist. So I think we're going to get a very interesting data set from Amgen this year. On a competitive product, there would be a once-monthly injection. You might not even need an oral drug once a day, right? Of course, all of these have a room to play. But it just shows how hot the space is, meaning money coming in and going out, fast money.
OK, that's interesting. So there might be room for different types of medication in this field. Sam, thanks very much. Sam Fazeli from Bloomberg Intelligence. We'll come back. We'll talk investment themes with investment solutions at City Wealth. This is Bloomberg.
I believe the current data are consistent with achieving a soft landing. And I'll be looking for data over the next couple of months to buttress that view. So while I don't believe we've reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted.
Are we there yet? Chris Waller being over his shoulder. Not quite, kids. We're nearly there. We're not quite there yet, but we're getting there. We'll be there fairly shortly. The Fed feels like it's moving in the direction of rate cuts. The market is pricing in September as an increasing probability, a certainty almost, judging by the data that we are seeing at the moment. Is that the theme that is dominating, though? It wasn't yesterday. Yesterday was about the big tech sell-off. We've been waiting for it at some point. This is a place, remember, where so many people have been hiding out, parking their money. and generating decent returns. That's where the outperformance has come from. Does that start to turn as the market broadens out a little bit? Christian Bitterly, Head of Investment Solutions at Citi Wealth, sitting next to us around the table this morning. Nice to see you in Europe.
No, great to be here. Thanks
You've been all over the place. You've been in Asia, you're here in Europe, you've been to Latin America, you've got a pretty good view of what's happening in the States. Let's start with tech.
Okay.
If I wanted to outperform this year, if I want my portfolio to do well, I've had to have put some money in that space. Is that phase coming to an end?
I mean, look, you had the first half of the year, you basically have tech delivering, close to 68% of the earnings when you look at those mega cap companies. So our view was always you need to have exposure to those companies. They're the ones that have the large free cash flow generation. They're the ones that really are driving a lot of the advancements and benefits when it comes to areas like Gen AI. But our view has always been you need to broaden that out.
Yep.
So that idea, when you're looking at this rotation into like the S&P 500 equal weight, that's very sensible because the earnings story this year is actually one where it's not going to be dominated just by those names. We expect that in Q2, we're going to see 10 out of 11 sectors pivoting to earnings growth, when in Q4 of last year, that was 7 out of 11 sectors that were in earnings recession.
So the first half of the year, I bought the S&P. The second half of the year, I buy the equal weight.
I think you do equal weight. And I think what's interesting is the action that we're seeing in semis and tech, I think that has more to do with politics in the U.S. right now than anything that's happening from more of a macro perspective within markets.
I'm going to follow up on that one.
We thought you might. That's
why we both looked at you.
I can't wait for it.
So the chip sector has been really wonky from kind of an options perspective, but it feels like it's only been rallying fundamentally because it is working as a defense company is, that every time a government contract is awarded, how much of that is a, dare I say, a little bit of a Trump trade or a possibility of that? If we're talking about the repeal of manufacturing jobs in the States, or at least bringing back down to earth, or some of the IRA chip action coming to those chip companies, how much of the chip reversal is a Trump story?
So I think, like, just the initial market reaction to it, I think when we look at, like, politics, it's really going to be policy that drives the longer-term story here. It's not political rhetoric. And so that headline around tariffs, when we look at the fact that, Taiwan produces 80% of the advanced chips, these are important stories within the supply chain. But another theme that has dominated this year is this idea of economic security and what does that mean? And access to chips, like when you think of the necessity to have that full value chain, that is a degree of economic security. So that's given a lot of nations thoughts around making sure that they have access to the extensity of that, which I think will continue to play out.
So what do we classify? I'm going to be very kind of simplistic about this. What do we classify the chips trade as? A bid for chips? It used to be an inflationary hedge. It was a 2021 play on inflation. Then it became a geopolitical one. To your point. It kind of feels like it's becoming a domestic political one now. But then there's the AI trade that kind of gets roped into
that. There's the Gen
as well.
AI, which is obviously a select companies. There's the equipment makers that were obviously very hit yesterday.
So when you see a pullback like that, what are we attributing that to? Is that just options?
I think it's taking gains, too. I mean, when you put the pullback into context, it's like you have a headline like tariffs. You have a headline like when you look at the probability of a Trump presidency, what does that mean? And then you look at the fact that a lot of these companies are up 10, 20, 50+%, giving back some of those gains, taking a breather in earnings season, waiting to see are they going to, beat and raise, which has been a pretty consistent story this year. I think that's what it is.
So you are seeing this rotation away from tech into other sectors, and you mentioned the expectations around earnings and how it's going to be broader, and so you buy the equal weight as you were suggesting. We were all reading a note from Goldman Sachs yesterday that was saying they're not buying the dip because of seasonality. They're concerned about what happens in July and August. That might be a little too near term for wealth clients, but I wonder, is that something that you're thinking about? Is there vulnerability and volatility in the short term?
I think there's certainly volatility in the short term when you have everything from the election uncertainty. That's something that when you go into, particularly within the U.S. market, you tend to see the spikes in volatility happen within September, within October. I think the other thing, though, that is becoming more certain, or it looks like it's going to be more certain, is rate cuts on the table. And so we started this year actually thinking we were going to get 3 rate cuts, and we held to that. Even with the volatility that we saw, it was 7 rate cuts priced into the market, then down to close to 0. And so I think you have more, what the market doesn't like is uncertainty. So the idea that we could actually begin on that rate cut cycle starting in September would actually be then a net positive.
I noticed in your notes as well, Christine, you were talking about M&A, in particular in certain sectors. Healthcare, I think, is one of them. I was also reading a piece by one of our colleagues in Opinion talking about how PE deals might be coming back after a couple of years of that area being pretty quiet. Is that a theme that you're investing around, the broad M&A story? We hear it a little bit from investment banks as well.
Yes, absolutely. So when you look at, and particularly within healthcare, so healthcare has been a very unloved sector, as you know, other than the two major names that are involved in GLP-1 drugs. But when you look at broader healthcare, whether it's biotech, life sciences, medical equipment, these are areas that we've liked, even though the earnings necessarily haven't been there. But when we look at different catalysts, there's certainly long-term catalysts in terms of demographics, investing in longevity. But as we see that rate story become more certain in terms of rates coming down, then you ultimately have the benefit of M&A activity would pick up. And you have those big pharma companies that naturally, what do they have to do? They have to build their pipelines. And so that's something that it will be rates driven, but you could see those markets open up.
Does diversification mean Europe? Or do we stay away from Europe? If we're looking at pharma, do we go to Europe? Do we stay in the United States? How do I do this from a geographical point of view? Europe's got plenty of chaos of its own as well on the politics front that it needs to deal with too. How are you thinking about where geographically you want to be putting your money?
So I think geographic diversification is important for a number of different reasons, but I think you have to be careful. So when we talk about investing in Europe, investing in the UK, we are looking at, it's more of a stock selection story,
right,
and companies that are tied to these long-term unstoppable trends. So where you see these multinational companies, whether they're involved in healthcare and pharma, whether they're involved in actually some of the rise of AI and digitization, there are opportunities not just within this region, but also in Asia more broadly. But it's not just buying the index. So I think the key is it's not just passive exposure. You have to be very thoughtful in terms of the themes where you see the valuation benefit as well as the valuations.
So speaking of the themes, one of the themes that we've been hearing, I think for the past 5, arguably 8 years, is nearshoring. And I think a lot of people kind of roll their eyes when they hear that term. But I'm curious how much of this shows up in the market. And the reason I asked this, I had a really interesting conversation yesterday in the private markets with one of the top tier kind of banks who operates in that space, talking about the fact they're just now seeing evidence of that capex spend, and they're seeing it in the private market. I've heard Spanish banks, for example, talk about capex spend in Mexico, et cetera. Does this theme set up S&P 500 companies, Stock 600 companies for a big capex expenditure that's about to hit their balance sheets to address nearshoring, whether it's in response to Trump, whether it's in response to the far right here in Europe? Is that something that's on the horizon?
I would say when you look at the publicly traded companies, I think the areas that we're looking, particularly when you look at, okay, with nearshoring within Mexico, and then thinking about what that would mean for the broader economic impact within the U.S. market, I think industrials are probably the most obvious place to play there. And it's also one of the largest areas when you look at another part of the market that we've been investing in is mid-cap. So looking at that valuation disconnect between those mega-cap companies.
But is that a tailwind or is that a hindrance?
I actually think it's a tailwind when you factor in the nearshoring component of it and you factor in what we just talked about. What do we know to be true when it comes to, regardless of who wins the election, what do we know that is going to, where we're going to see continued investment? The Gen AI story, yes, you could invest in those mega cap tech companies, but you need the infrastructure, you need the energy, you need the data centers to be able to do that. Even when you look at our energy grid within the U.S. and the investment that I think both sides, right, of politics would be in favor of that type of spending. I think that's where, if you're going to put money, I think it makes a lot of sense right now.
Kristen, thanks so much for your time. Good to see you here in London. Kristen Bitterly, Head of Investment Solutions at Citi Wealth. Coming up, we'll be back to some of those geopolitical threats that we were referencing in passing in that conversation. Ursula von der Leyen is speaking in Europe, in Strasbourg, in fact, ahead of a crucial vote later today. She's already said that Orban's visit to Russia was appeasement, a word that, of course, echoes through history, on the day that we see European leaders gathering at Churchill's birthplace in Oxfordshire. You're seeing live images of Ursula von der Leyen speaking there in Strasbourg. This is Bloomberg.
Europe cannot control dictators and demagogues across the world, but it can choose to protect its own democracy. Europe cannot determine elections across the world, but it can choose to invest in the security and defense of this continent. Europe cannot stop change, but it can choose to embrace it and invest in a new age of prosperity and improving our quality of life.
European Commission President Ursula von der Leyen up for re-election today, waiting for that vote a little bit later on today, 12 o'clock noon UK time, 1 o'clock locally in Strasbourg, where she was speaking. And she has been talking this morning then, Kriti, about a whole host of things. She was talking very much there about preserving democracy and defence.
Certainly, in addition to your point, talking about the EU's climate ambitions, bolstering the competitiveness in the region. You mentioned that appeasement line as well, all coming in the push to strengthen some of those defense industries. She's also seeking now to lock a second term ahead of the bloc's executive arm. Let's get more on the story on location. Bloomberg's Lyubov Pronina joins us this morning. Lyubov, walk us through the expectations of this vote. This is clearly taking longer than initially expected. Is this when she finally gets that support?
Well, the vote is taking place in Strasbourg today, as you rightly mentioned, and is going to happen a few hours later in the afternoon. We just heard Ursula von der Leyen speak on the main priorities for the next 5-year mandate, which she's hoping to get, and she has called on the Assembly members, the new Assembly that was elected in June, to support her. And there is an expectation that she will get the support for the second term. She needs at least 360 votes. And the political groups, the main political groups in the parliament that are part of the coalition, the Christian Democrats, the Socialists and the Liberals, support her, but she's also trying, she has been trying to gain more support from other parties, including the Greens.
Let's talk about what she's been saying thus far. Let's give us an idea of the kind of the policy story that is developing from her. What should we expect if we do get another 5 years from Ursula von der Leyen?
So we got an earlier look into the political guidelines that were published shortly before her address to the Assembly this morning. And what she has said at the beginning, that in her view, the main challenges of this era are climate, competitiveness, and also security. So basically, these are the main pillars that she will be using to base her next 5-year mandate policies on. And she spoke across the board. She spoke about climate, about competitiveness, about trade, about international relations, support for Ukraine, relations with China, improving relations with the UK, and also domestically improving the housing situation for Europeans that are suffering from the cost of living crisis and actually live in quite a lot of anxiety. So she addressed many of these subjects, but high up is the prosperity, sustainable prosperity and competitiveness. And she also said that all the goals that were mentioned before in the previous mandate, and central to this is the so-called Green Deal, which is aimed at achieving climate neutrality on the continent by 2050. That should stay the course, that should remain there.
Lyubov, just briefly, what happens if she doesn't get the votes? I know she is expected to get the votes, but what happens if she doesn't?
Well, if we look back to 2019, she won with a very slight margin of just 9 votes. And in private conversations with lawmakers the days before, they were saying, oh, it can be very tight. But then yesterday they were feeling more relaxed about it, that she will gain the support of the required majority. If that doesn't happen, then we'll have to go back and new candidates will have to appear. But again, there is a wide expectation that she will get through this vote today, and we'll hear about it in the early afternoon. The vote takes place at 1 Central European time, and sometime past 2 we should get the results.
Thank you very much. OK, so we'll look for those votes later on, early afternoon. Bloomberg's Lyubov Pronina with the latest on the goings-on in Strasbourg. And some of the lines we've heard from Ursula von der Leyen will be resonating at Blenheim Palace today. Bloomberg's Oliver Crook is there for us, of course, this gathering of European leaders taking place at Blenheim. And this line around Hungary's Orban and his visit to Russia as being appeasement, Oliver, that's no doubt something that will be talked about at Blenheim.
Yeah, no doubt, Anna. As you say, we're at Blenheim Palace, the birthplace of Winston Churchill. And so when this idea of sort of appeasement within Europe for what many in Europe consider to be almost unanimously a fairly large adversary in the form of Russia, it really does resonate. And it is something that is going to steal the spotlight. We should also say, Anna, that this began. Viktor Orban went first to Kyiv, then to Moscow, then to Beijing, then to D.C., but also to Mar-a-Lago, right? And that was a couple of weeks ago. And we have to say that the U.S. electoral campaign has changed massively since he had since he made that visit. And during that time, he also sent a letter to the EU saying that basically Europe needs to prepare for a new president potentially in the White House and really betting on Donald Trump. And that has sort of materialized in a sort of more dramatic way than we had anticipated with the assassination attempt. And of course, now the difficulties that Biden is having. And right now, for all of these leaders, and Orban will be here, there's going to have to be that discussion. But it also centers around now how they want to build a security pact that goes beyond just the EU, that brings in the United Kingdom, that brings in maybe other countries here in Europe. That is going to be the main focus here. And of course, the question for leaders and the question for European leaders, and they need to really ask themselves this question now, are they willing and are they capable of supporting Ukraine all on their own without the support of the United States?
And where in that logic or in that equation does the UK actually fall here? Keir Starmer has had a really intense couple of days, arguably early start to his time at Downing Street. First at the NATO summit, and now here. Is there anything from a UK side that's kind of seen as a deliverable here?
So this is the security pact, I think, is what we're trying to get the details on. So this is the thing that's been billed as one of the big concrete deliverables. There is not a lot of detail of what this would look like. But Kriti, why it's important for the United Kingdom is because, as we just heard from Ursula von der Leyen, first of all, they're going to appoint for the first time ever a defense commissioner. Of course, defense has been a huge issue within the EU. There are vast sums of money that they're hoping to deploy to that. But not only to spend more on defense within Europe in terms of building out their militaries, but to spend those dollars and those euros within Europe, not just send it over to the United States. The question is, does the UK qualify as being within Europe when it comes to that spending? And that will be absolutely crucial for the UK defense industry. Has a number of fairly prominent companies. If those EU funds can sort of go to the UK and sort of prop it up and be considered EU spending, that is going to be a central question here. And it's really central for Keir Starmer, who has said very explicitly he wants to redefine his relationship with Europe. There are a lot of questions around that about what sort of mandate he has to do that from within the UK, but also what the EU will allow. The question is, with Trump potentially a more likely presidential outcome in the United States, does that give more incentive within the European community outside of the EU to band together into a more cohesive bloc?
Ollie, one of the themes that unites European politics, and to a certain extent US politics as well, is immigration. This is a subject that Keir Starmer needs to get invested in. Giorgia Meloni's invested in. Emmanuel Macron is invested in. What are they going to talk... Is there, again, a potential deliverable out of these meetings that are going to take place, these one-on-ones that are going to take place, to maybe find a better solution for Europe to manage this holistically?
So listen, I think that migration is one of the key questions here today. It was one of the key questions of the Brexit vote that really sort of defined UK's relationship now to the European Union. And it is inevitably a question that is going to come up and a question that leaders need to address, even those that are the most sort of reticent to do so. I mean, you've heard it even in Germany with Olaf Scholz, who at first was sort of reticent to embrace this as a topic that needed to be addressed, has now sort of come on board. So that is one of the sort of main 4 sessions that is going to be here at the EPC today. It is actually going to be chaired by Giorgia Meloni, which is sort of interesting to see how the Starmer-Meloni relationship will go forward. But we should also mention, Guy, that in the von der Leyen speech and the sort of priorities that she set out, they're going to triple the number of border guards within the European Union. So it's really interesting to see, sort of an echo of what we hear from, frankly, from Trump and from the conversation that's happening over in the United States. So certainly this is going to be a big topic. And we should say also that obviously Turkey is here, who is a key player within that discussion.
Great stuff, Ollie. Thank you very much indeed. Ollie Crook joining us from Blenheim Palace. We'll continue to keep you up to speed with what is happening, not only at Blenheim, but also in Brussels, as we watch the countdown to that vote a little bit later on for Ursula von der Leyen. What else are we watching today? 1:15 p.m. UK ECB, that's the UK time. ECB rate decision. Lizzie Burden's going to be all over that one. You've got claims every Thursday. We'll get them a little bit later on at the United States. Last set of data. Been quite interesting, actually, on that front. Logan and Daly are going to be speaking from the Fed. Finally, of course, the main event today, Donald Trump speaking at the RNC, accepting the nomination. This has been, people are arguing this has been a fairly well-managed convention, that actually the Republicans are looking organised versus what is happening, certainly with the Democratic Party right now. I'm assuming they're going to want to continue that today and reinforce that theme as well.
Well, the bar is low in the entire political landscape to look organized right now, especially for the GOP that had that kind of Rolodex of speakers that kept needing to come in and out of Congress. It's interesting because it's coming off of JD Vance's speech in the last 24 hours. And he, of course, comes in with some very strong rhetoric on manufacturing, China, jobs, and going towards Mexico, of course, as well. But I think what's important is when he was chosen, he was really chosen to appease some of the, and I'm realizing I'm using the word appease, but to really kind of speak to the more right-wing members of his party. If you see President Trump echo that same rhetoric, it shows them that he's going to be leaning more in that direction when it comes to his policy agenda, which we haven't seen yet. He's been pulling back from that because one of the things he's kind of learning from some of his other candidates that he was in the running for, Nikki Haley, for example, is that he needs to prove that his economic agenda is sustainable. It's one that's going to help the deficit, and it's actually one that's not chaotic and one that is well thought out.
And perhaps, you know, we can find plenty of economists who say that some of the policies that Trump is proposing right now are going to be inflationary. So how he counters that will be interesting. I'm very interested in what JD Vance had to say about Wall Street and around how they position themselves around the business community, because this has been a rich theme for populists in Europe and even just right-wing parties in Europe that aren't necessarily of the typical populist variety. I'm thinking about just the Conservatives here in the UK being rude about business under Boris Johnson, and that seems to be an area where we've seen movement in the right of politics away from embracing business and what Donald Trump stood for decades ago towards something that is a more anti-business in certain places.
Essentially, that's where the money comes from, though.
Yeah. How's that say?
Which is an interesting kind of relationship. It's going to be fascinating to hear what he says. The fact that Nikki Haley supported him, does that necessarily mean that Nikki Haley voters will support him as well? I think is a really key question. If he tacks to the right, does he take that centre ground with him?
It's a begrudging endorsement, and then he's like, well, I guess he's the nominee, so I guess we'll support him, which is kind of how she said that. It's also important to your point on the business as well, because we know JD Vance comes from a Silicon Valley kind of background as well, but he's really, President Trump's really trying to appease to the labor portion. The Teamsters Union showed up for the very first time at the RNC, which is traditionally a left-leaning group.
Yes, yeah, absolutely. Pieces are moving around when it comes to the business and politics. We are going to be live on the ground at the ECB as well. It's been such a busy morning. We
can't believe we haven't talked about the ECB.
Conversation. Not expecting a rate change though, but any guidance on where we go next will be, of course, closely monitored. Live in Strasbourg at the ECB in Frankfurt, also live in Oxfordshire at Blenheim Palace. This is Bloomberg.